Hi there, this is another in the investment in shares series, and this time I want to take a look at the bull market that started a short while ago. And most people are still disbelieving of the fact that we could possibly have a bull market in this kind of environment. So I want to go through the background as to why I believe this is such a great opportunity at the moment. Now shares are moving higher and have been doing so now for about the last month or so. And my reading of it is that on a global basis and on a local basis, a new bull market is emerging and will probably run for quite some time. Now there'll be some corrections and there'll be some volatility, that's normal, but I believe the direction is upwards. And most investors are going to miss most of this because they're listening to the media and they're listening to the voices in their head. And it's all down to quantitative easing that we saw from the European Central Bank a few weeks ago and from the US Federal Reserve last week. And you may have heard this term quantitative easing or QE thrown around. And it basically just means that the central banks are creating money out of thin air. They're injecting more liquidity into the global monetary system. Now this is the time when smart investors really make their money. These sort of opportunities don't come along all the time, and this is a really good one. Now the reasons that I say that, looking at it from a fundamental point of view, the fears over Europe have disappeared. What we saw in 2010 and 2011, there were sudden corrections in the market, were due to fears about Greece and then Spain and then Italy and other countries and the fear that the euro would break up. Now that fear has largely disappeared because of the actions of the ECB, and that was ratified in the German Constitutional Court just last week. So stocks are rebounding to reflect that fair value again. So it's a very solid underlying reason why that's the case. The second reason that's related is basically the open-ended nature of central bank policies, and we saw the Federal Reserve last week basically say we're going to print as much as we need to for as long as we need to. And so this is going to be a massive stimulus for hard assets, and by hard assets I mean gold, oil, copper, and certainly resource stocks. The third reason is that interest rates in Europe and America can't go any lower, and with the fear of major capital loss removed because of what's happened in Europe, money's coming out of hiding. Money's been hiding in the bond market, and money's been hiding in very low paying term deposits. Money's coming out of there now because there's not as much fear about losing the capital, because the returns in those areas are so low. So money's coming out looking for better returns, and those returns are certainly happening. The next reason is that investors are acknowledging that there is an inflation prospect, and it's significant, and that they need to move back into risk assets. It's not just a choice, they have to move back into risk assets, otherwise they're going to get killed by the coming inflation. The next reason is that it's sort of like the market is guaranteed. There's a famous old saying, don't fight the Fed, and the Fed has made it clear that they intend to push markets higher. And Ben Bernanke, who's the head of the US Federal Reserve, pretty much summed it up when he said reducing unemployment and forcing the housing and stock markets to rise will make people feel wealthier, so they'll spend. Now, you can't get much clearer than that about their intentions, and certainly the US Federal Reserve has the capacity to drive stock markets and commodity markets. Now the gains won't be across the board, I don't believe. They will be sector specific. So don't just go out and buy anything. Precious metals are already benefiting greatly, and gold stocks will do best out of that, I believe. Banks should also do reasonably well during this period as well. Now the performance of the major resource stocks, BHP, Rio, etc., will depend to a certain degree on China. So they've got a tailwind now from what's happened with the action of the central banks, but just how far they run will depend a fair bit on perceptions about China. Now gold stocks I think are going to be the area where the most money can be made. and they are in a major catch-up phase. In fact, they're just at the start of a major catch-up phase that could last a year, 2 years, possibly longer. And it wasn't that long ago that gold stocks were trading at basically 40-year low valuations relative to the price of gold. So there's an enormous amount of catch-up that can occur yet. Now, just a reminder, this information is of a general nature only. So what should you do if you're not currently in the market? Well, my clear advice to you is start now, because these opportunities only come along once every couple of years. There's no point in waiting any longer. Things started moving about a month ago, and there are already some great gains have been made, but this is still very early in the process. And capturing those first few months of gains makes a huge difference to your overall results. So what do you specifically need if you're not already a trader or an investor? Well, look, you need to know what you're doing, and so many people run into the market without really knowing what they're doing. So you need some well-targeted education. There's a huge amount of education out there, but you need access to just the important parts, the parts that are relevant for you. The second thing you need is a trading or investment plan, so that you're very clear about what you're doing. And the third thing you need is some guidance towards the best opportunities that are available right now, because the best opportunities are going to be very, very sector specific, as I indicated earlier. Now, here's just a couple of examples of some of the gains that have been made just in recent months. A couple of gold stocks here. Silver Lake Resources, Regis Resources have gained 78% and 58%, 54% respectively in the last 4 months. Decmil Group, which is a resource service company, gained a third in the last 7 weeks. And an IT company called SMS Technology has gained 27% in the last 2 months. So there's been some great gains, but there is plenty more to come. This is absolutely the best time to make money quickly and relatively safely. And it's when most people aren't expecting it. So now's one of those rare times, and I'm following the global and local stock market trends very, very closely. So to stay in touch with what I'm seeing, you need to subscribe to our channel or go to our website, specialistshareeducation.com.au, because there'll be lots more information. Exciting times. Cheers.